That looks like it's actually working. It looks like it's actually working. Cool. Cool, cool. All right. I'm hearing my own voice. That looks like it's actually working. Okay. Are we good? I think I've got it. I think I'm live streaming on YouTube now. So we're actually in the Zoom and we're on the YouTubes, and that YouTube should save it for later so that we can watch it again. Awesome. Awesome. All right. All right. Thank you for turning up. Thank you for being on time. We're handing out free information. It's not handing out actual gold or Bitcoin or fish burritos, but we are here, and we just got someone else joining. All right. I'm guessing you guys are muted when you come in, but we can have a chat at the end if you've got some questions. I'm hoping to do this in like 10, 15 minutes, and then give extra time for you guys for questions at the end. So I will just share. Okay, and just if you can unmute and just say whether you can see that, because I've got two screens and I'm not sure what's coming through. So,
yep, I can see it. New gold rush.
Sweet. Thanks, Stacey. All right. All right. So again, very quickly, just going to move through this. You might not have seen Agamemnon's death mask from Greece from 2000 BC, but you've probably seen the other guy. So gold has been around for a long, long time, thousands and thousands of years, and not just for decorations and jewelry, but actually for money. We've used gold and silver for thousands of years, because not only are they pretty, but they're also scarce, unlike iron and copper and things like that. This is a little picture, gold mining back in the gold rush days, the 1850s, where you could literally walk along, kick your toe on a rock and go, hey, I've found gold. Lots of people made a lot of money back then, and it was relatively easy to mine the gold. You just needed a pick, you needed a shovel, sharp stick, little pan, easy peasy. And then once all the surface gold was gone, it became harder, and we needed to mechanize. There was actually guys who were digging gold pits with horses, and then obviously we started using machinery to get the gold that was below the surface, because once you sort of dug down 3 feet, 6 feet, the mines would start caving in, and we needed to have industrial equipment to actually help us get to the deeper gold. And as it cost more to use the industrial equipment, then the price of gold actually went up because it cost more to produce it. Very simple. You guys know all this stuff, so I'm not explaining rocket science. And, another 100 years later, and now we've got super industrial gold mines that, the average guy hasn't got a chance with a pick and shovel. And instead of being $10 an ounce, gold is now closer to $2,000 an ounce, because it costs so much more to get the deeper down gold. And there will come a point where it's just simply not viable to dig any more gold out of the ground. Gold, again, used to be currency, not just for the ancient civilizations, but also for our modern civilization. Only just 50 years ago, the US dollar was backed by gold, and about 100 years ago, the British pound was backed by silver. So paper notes were just a promise to actually give you the underlying asset, and you could literally walk into a bank back in the olden days, and it was payable on demand. You'd hand over a $20 note and the bank teller would give you an ounce of gold. Asset-backed currency, great idea, until it wasn't, until the government wanted to start printing currency out of nothing. And you can see in this little chart here where the money supply have actually started printing more and more money. Obviously, 50 years ago. The 2008 financial crisis, you can see where they printed a lot more money, went from 2 trillion to 4 trillion. And then the following year, they stopped printing so much money, supply went down. And then as we move, 10 years after the global financial crisis, we've had the pandemic. And the pandemic money supply has dramatically increased, made the global financial crisis just look like a blip on the radar. When you go from 4 trillion up to 20 trillion, massive amount of money that was printed. And of course, the more money is printed, the more money becomes worthless. And cash is worthless, and prices of things have gone up dramatically. Hence why we're suffering from high inflation at the moment. Bitcoin was created in the aftermath of 2008. In 2009, we had our first Bitcoin because of the bank bailouts, because of the government's central banks printing trillions and trillions of dollars to give to these institutions, which created the mess in the first place. And all it did was devalue money for normal people. So you might have had $100,000 cash in the bank and you go, hey, I'm rich. And 20 years ago, you were sort of rich. But then they just print trillions and trillions of dollars, and all of a sudden your $100,000 can't even buy you a car anymore. 20 years ago, you'd buy a house with that money. Now you can't buy a car, and in a few years' time, you won't be able to buy a bag of lollies. So Satoshi Nakamoto, anonymous creator or creators, made Bitcoin to be digital gold because they liked the system where currency was actually backed. And again, looking at digital gold, this is the built-in mechanism for the computer code is that Satoshi knew that computers get faster and faster every few years. So, back in 2008, 2009, you could mine Bitcoin on your laptop computer. But by the time we're 10 years down the track, your phone that you carry around in your pocket is much more powerful than a laptop computer was 10 years ago. And every few years, computers get faster and faster. So what they've factored in is that every few years, the Bitcoin supply, the mining reward will be cut in half. The supply is fixed, like the supply of gold is fixed, but how fast you can actually dig it out of the ground is going to be halved every few years. So at first, the mining reward was 50 Bitcoins every time you mined a block. That was halved in 2013 to 25 Bitcoins. And as you can see from the chart, the price went up by about 100 times when the mining rewards were cut in half. It was excessive for the price to go up 100 times when the supply was literally cut in half. And then it has crashed down a little bit. This is what they call price discovery in the stock market. So we go too far one way and then we come back too far the other way, and you even out over time. But then again, 4 years later, 2016, when we had the next halving, the supply was cut from 25 Bitcoins to 12.5. And because it was more scarce, the price increased. Price increased by 30 times, which again was a little bit crazy, which is why it crashed down a couple of years later. But you can see over time, the chart is continually going up. And then we had the third halving in 2020, just in time for the pandemic. And the reward was cut from 12.5 to 6.25. So that's how many Bitcoins you can dig out of the ground now, as opposed to digging 50 out of the ground when things were a little bit simpler. And the price increased by 770% back then. Now we're on the cusp of the next halving that's coming up in the next couple of months. These guys are forecasting based on the hash rate and the halving that it's going to be another 12x. So I personally think that's a little bit optimistic, that Bitcoin's going to increase in value by 12 times its current price, which is about 30,000. I think it'd be great if it was 3 times, but that would be the smallest one we've ever had. Smaller than the one that we had in the pandemic. But I'd be happy with 3 times, 12 times, absolutely fantastic. If we did 7 times like we did in the pandemic, that would also be great. So the other things coming into play is also the crypto regulation and the ETF, Bitcoin exchange traded funds, which are being put forward by BlackRock, Fidelity, Wisdom Tree, ARK Invest, and a few other people. So there's a perfect storm coming in when the supply is going to be more scarce, and also there's going to be more people who are actually able to buy Bitcoin, because obviously Bitcoin is complicated at present because you need to have a seed phrase and you need to have secure storage and you need to have all this sort of stuff. But when you can simply phone up BlackRock or Fidelity or Vanguard or someone like that and buy Bitcoin as easily as you can buy stocks and shares, a lot more people are going to want it. Just a few altcoins in there that came after Bitcoin. And Bitcoin drives the market and everybody else reacts to it. And that's just the way the system goes, and that's fine. The altcoins can go up a lot higher than what Bitcoin does. You know, when Bitcoin goes up seven times, they might go up 20 times, but they can also drop a lot lower as well. And you can, as I say, you can get your own Bitcoin. You can buy from an exchange. You can get your own storage. You can research into altcoins and look at those yourself and decide whether you're going to buy a Dogecoin or whether you're going to buy Ripple or Zcash or Secret or any of the other 20,000 coins. You can do that yourself. We've given a lot of free information over the last 7 years, so you're welcome to actually access that information. And for the people who don't want to learn or don't have time, can't be bothered looking at all the information, because we've digested down, you know, maybe 200 coins out of 20,000, but there's some people who don't have time for that as well. So the other option is to have someone look after it for you. Like most people have their superannuation looked after by a fund manager, rather than running their own self-managed super fund. You know, 85 to 90% of people have a professional fund manager do it for them. So that's, again, an option if you don't have time for that. Just the benefits of diversification. So the orange line there is Bitcoin price over the last 7 years, and the blue line is how we went with the portfolio that had that diversification in it. So a lot better in some years, not quite as bad in the bad years. And again, I'm not telling you anything you don't know. You all know about putting your eggs in different baskets and diversifying into different things, stocks and shares and property and that sort of stuff. So there we go, very quick. I said I'd only be 15 minutes. So if you want some more information on the done for you service, or if you want some more information on the do it yourself service, you're quite welcome to access either one of those websites. So that's my bit. And then I can actually put that away if everyone's got a picture of that on the little QR code. Yes, yes, yes. I'll put that away and we can just have some questions for you guys. Brett, I can see you're sitting up and you're already unmuted, so hit me, mate. What would you like to know?
Okay. What do you think of XLM and XRP? I'm hearing news about that, but to be honest, I don't know much about crypto. I haven't invested really any money into crypto because I guess I'm more traditional. I'm thinking, you know, I've got a fair bit of silver.
Yep.
Which I think is, I suspect will go up probably more than what gold will.
Yep.
But yeah, I haven't ventured into the crypto space at all, really, because I guess I'm just dubious. You know, I just feel like, you know, you can just lose all your money, whereas, you know, something like silver, I don't think precious metals, tangible metal, I don't think that's going to ever lose value, or it's not going to go down like some of the crypto currencies. They can just disappear.
Yeah. It depends when you bought your silver as well. So if you have a look at the silver chart over the last, you know, 30, 40 years, there was definitely a really bad time to buy silver in the 70s. And, you know, if you'd mortgaged your house to buy silver in the 70s and then needed the money to live on, a couple of years later, you would have lost, you know, 20, 30% of your money. So, and similar things with gold, you know, the price goes up, price goes down. Long term, it's always going up. I'm a big fan of the gold to silver ratio, and you can track that for thousands of years because obviously the Romans had kept it, the Greeks had kept it. They knew how many pieces of gold to how many pieces of silver. And silver, of course, is used up in industrial settings. So gold, there's the same amount of gold on Earth as there was 5,000 years ago, but there's actually less silver, because when they use silver in photography, when they use silver in autoclaves and in medical industry, the silver actually gets burned up. It's destroyed. So yeah, silver is a great thing. I agree with you. I think it will actually do better than gold, again, over time. But it's good to have gold and silver and, stocks and shares and, different things, because not everyone is a winner at the same time.
Yep.
For when was it? 92 to 2004, the gold price was basically flat. Again, have a look at the charts yourself, and you can see there was periods where, like your favorite investment did nothing for years. And I'm not just being racist against gold and silver, because there was a time between 92 and 1999 when property was completely flat for 7 years as well. And, when there's something boring going on over here, you can bet your bottom dollar that everybody else is overlooking at the other game. And so when property is flat, that's when stocks and shares are going great. When gold is flat, that might have been when the bond market was going. So you'd have to look at different things. And unless you're going to be an expert on every single resource and every single commodity in the world, and have the patience of Job and precision timing of a sniper, then that's why you'll see those funds, like when your super funds, that'll have like 25% property, 10% bonds, 35% shares. So when one's going down, the other one's going up, but you don't need to jump every single time. I mean, as a responsible financial advisor, the general consensus from the Wall Street boffins who have actually done all the back testing is 5 to 10% of your portfolio in cryptocurrency, no more, no less. Because if you have more, as you say, Brett, like there's volatility, and crypto can have the 700% rises, but it can also have an 80% drop. But if you're in there for 5 years, over time, that sort of balances out. If you have too much, then obviously it's you put your whole life savings into Bitcoin 3 years ago, and it dropped 50%, you'd be very upset. But if you didn't have any money in Bitcoin 5 years ago and Bitcoin went up 700%, which it did, then you'd also be upset. So that's why you have a little bit in there as well as your stuff that you've got invested in other things. Cool.
And with regard to XRP and XLM, what do you think of those?
Mate, they're two of the good ones out of hundreds and hundreds of good ones and thousands of bad ones. It's like, crypto is kind of like a stock market where everybody was invited. So, BHP can list on the stock market because they've been around for 100 years before the stock market even existed. And they're audited and they're checked over, and people can look into them and check out the background of the guys who are running the company and what they're doing. Whereas, your mate down the road who's got a restaurant and the restaurant's always empty, but he seems to be still paying his rent, and you start to wonder whether he's selling drugs out the back or nobody knows. He could actually list a cryptocurrency, all right? So you get a lot of rubbish in there. You get a few good ones as well. And it happens to be like, it's about 80% rubbish, 90% rubbish. And that's not just me saying that, that's Cointelegraph who actually studied it. They found 92.5% of altcoins were scams. So that's pretty high. Regulation coming in next year should actually reduce that, but it won't eliminate it.
Yeah. Hence my skepticism.
Yeah. But I mean, if you were going to say, if I said to you that those two that you mentioned are the greatest and best in the world, which I'm not saying they are, but if you put your entire life savings into them and they went down by 20%, you're going to be upset. If you put your life savings into them and then there was another one out of left field that took off and made 300%, you'd also be upset. And that's why we have the diversification. So if we go back to that little pie chart that we had there, like 4 years ago, we took a little punt on this coin that no one had ever heard of called Solana. And we just put 1% of the portfolio in there. I thought, like, if we lose 1% of the portfolio, it doesn't matter. But if it goes well, it goes well. And of course, Solana went up 13,000%. And we go, wow, it was 1% of the portfolio. Now it's 15% of the portfolio. And if we lose 15%, like if it goes broke tomorrow, we're going to be very upset. So we actually sold off half of that and put it into something more conservative and let the other half ride. So again, you can mention two good ones out of the top 200, but are they going to be the best ones? I don't know, and that's why we diversify. So, yeah. Warren, are you there, mate? You got a question? You're going to need to unmute yourself, mate. I'm not sure what that is.
Hello, Jeremy. Yeah, I'm still walking back from the car. I just got to get in the house yet, so I'll turn on the video soon.
Okay. Have you got any questions on what we've discussed so far? Or any questions that you got from your own research?
Not really. Research. Geez, I don't do research. I don't know what to do. It's all above me, really. I don't really understand much of what you've been talking about. But yeah, I just want something I can put a little bit of money in and make something back. That's all I want. Yeah.
I think it's going to be a very interesting time because this is you'd think that people would know by now. This is the third halving, but people weren't paying attention to the previous ones because people have got short attention spans these days. So, trying to remember what happened 4 years ago and how it's going to affect now.
That's a question I've got, Jeremy. Why is Bitcoin halving called a halving when the money goes up 10 times or 12 times or 5 times or whatever it is? Halving means it halves in price. It doesn't mean it doubles or times by 10. How do you explain that? What does that mean? This sort of thing, I'm just like, okay, I'll let the experts do that. I'll do something simple.
The halving is the reward. It's literally like in the 1850s, you could dig 6 inches into the ground and you'd probably pull out, I don't know, 2 ounces of gold, say. And then once everybody had started doing that, all the gold from the top had gone. So you need to start digging 2 feet down into the ground instead of 6 inches down to the ground. And instead of bringing out 2 ounces of gold, you only bring out 1 ounce of gold. So that's what they're talking about, is the supply, the new supply that's actually coming to the market. Because they only created like 21 million Bitcoins to start off with. That's all there'll ever be, right? Like however many ounces of gold, however many ounces of silver. There's only ever 21 million Bitcoins. Like gold and silver, you can divide it down. You don't have to have it full ounces. You can have a half an ounce or a tenth of an ounce or a thousandth of an ounce. But the new supply that's actually coming to the market each year is less and less. Like there's less gold coming to the market now than there was in the 1850s because they have to dig down a kilometre to get it. There's less silver coming to the market now than there was in the 1850s because they have to dig down a kilometre to get it. And every 4 years, the amount of Bitcoin coming to the market is half of what it was the previous time. So usually if the supply is half, the price should double. Technically, it should double, but as you've seen a few times, sometimes it's gone up by 1,000%.
Right. Okay, so halving is more of a generalistic term for the supply, and therefore the price increases a lot. Yeah, okay. Same thing. All right then, thank you.
Yeah. It's just the old thing about supply and demand. And the reverse is happening with cash when central banks are doubling the amount of cash that they print and the value drops in half.
Yeah, thank you.
Yeah. Bitcoin is the antidote to central banks, basically, because they can just print as much cash as they like. And obviously it devalues everything except for the scarce commodities. So that's why I say diversification. You should have some gold, you should have some silver, you should have some property, because those things can't be created, they can't be manipulated, they can't be generated out of nothing like central bank digital currencies can.
Can I ask, with regard to what you're just talking about with the supply of Bitcoin is halving, you mean is that like new Bitcoin that's coming onto the market is halved from what it was before?
Yeah. So there's not new Bitcoin being created, it's new Bitcoin that was not in circulation before. So there's still gold under the ground that we haven't got to yet.
Yep.
But the gold that gets dug up in the next 6 months, we would call that new gold, because it's new gold that wasn't in the market before, and
Yep.
now it is. But it's still not going to be created out of nothing.
Yeah. So with that, you're saying, okay, with Bitcoin, it's like it's new Bitcoin that's coming onto the market.
Yeah.
Okay.
It's still becoming more and more scarce. Like gold and silver are becoming more and more scarce, and land is becoming more and more scarce. The more we use, the less of it there is. So the price should keep going up, even if they weren't printing cash like there's no tomorrow.
Okay. And how much is it to invest into that managed fund that you're talking about?
The minimum for the Boston Coin Fund is 10,000. That's to start off with, and then after that you can drop in amounts of $1,000 whenever you feel like. Some people do it every month, some people do it every few months.
Yeah.
But that's pretty easy. Yeah. 10,000 for individuals, 50,000 if it's like a self-managed super fund or a family trust or something like that. It's basically, similar to your superannuation funds, 401ks, Roth IRAs, all those sort of things where people just put money into it and forget about it for 4 or 5 years, and then they look at it and go, oh yeah, it's going okay. So
Hopefully, yeah.
hopefully someone who knows what they're doing. It was interesting times last year, because obviously there was crashes and famous bankruptcies and things like that, with FTX going down and that sort of stuff. So we had a few competitors in the space with the mutual funds who just literally disappeared. They went out of business, went bankrupt. And that was because they didn't diversify. So Three Arrows Capital, they invested 43% of their fund with FTX, with Sam Bankman-Fried, who's now in prison. When you put 43% of your money into one thing and that one thing disappears, it obviously hurts. But as I said before, like we diversified, we put like 1% into the things that we thought were very speculative. And when it got to be above 10%, then we go, oh, it's getting a bit risky now, we'll rebalance down. But you never put half your money into one thing. That's crazy.
How much do you have into Bitcoin? What percentage?
I think it's around about 54 off the top of my head. But if you go to bostontrading.co, there's a little link in there that says portfolio, and you can click on that. It'll actually show you exactly what we're invested in right now. We update that when we buy and sell, so it's updated daily. And so it's got like a big bubble for Bitcoin. It's like, about 50%. And then you can click on the smaller ones. It'll tell you what they are. And when you click on them, it even shows you what they've done over the last week or so. So it's a fun little interactive thing. And as I say, we update it all the time because we believe in full transparency. There shouldn't be any secrets about where we're putting your money. You should be able to know where it is and what it's doing.
You're not concerned about, like FTX, that's the half of it into one thing. Is that
well, Bitcoin again can't be really manipulated by any central agency because it's fully, decentralized. That was the problem with FTX and a few of these guys. You're putting your money into it, and it's under the control of one bloke. This 28-year-old dude who's busy playing World of Warcraft while he's supposed to be having a meeting. And the guys weren't actually that clever. His girlfriend was talking about how great she was at trading, but she didn't use stop losses. She didn't use fundamental analysis. She was just gambling. And so if you're invested all with one company and that one company goes down, that's a problem. But investing into Bitcoin is more akin to investing in gold. It's not controlled by one company. Any more questions from you, Warren?
I need to go. Thanks for your time.
Yeah. I'm happy to wind up. It was just a quick one tonight, but obviously you've got resources and you can contact us any old time.
No worries. Goodbye.
My question would be, I need a dictionary to understand all this stuff. Yeah, I just give people money, and if they say it's worth it, I give them it, and then I should be able to get some money back, right?
Yeah, that's basically
That's all I do. I don't do anything else. It's pretty easy.
Mm.
Understanding all this stuff is a bit beyond me. So
Everyone's got their specialty, mate. I wouldn't like to do your job. You know,
yeah,
I'd have no idea what
yeah,
I was
you're probably
doing.
right.
Yeah, I mean, there was one time I decided to top up the oil on my car, and I didn't realize that there's like a little dipstick thing in it that shows you when it gets full. So I just poured in the oil and kept pouring it in until it flowed out the top of the car, and I thought, oh, it's full now. And then the next day, of course, my car wouldn't start, and I had to call the mechanic, and they picked up the car and had to tow it away, and literally like empty the car out, like tip it out. Like I put 20 liters of oil in, and the thing's only supposed to take 3 or 4. So yeah, that was me trying to be a mechanic, trying to save myself $50. Well, I can top up my own oil.
Well, you're doing better than me, because I've never put oil in a car, wouldn't know how to, or where to start, or what type, and all the rest of it. So I know where it goes, though.
Leave it to the experts and the mechanic. Like, I mean, he's great at working on my car, but he doesn't understand the stock market. He doesn't understand cryptocurrency. So I look after his money. He looks after my car, and everybody's happy. So it's all good.
All good.
So any other questions at the moment? Otherwise, we can catch up later on.
Not right now. No, all good.
Sweet. All right. Good to see you. Enjoy your evening.
Yeah, good to see you too.
Chat soon, mate.
Okay,
Bye.
bye.